So let us start with the trend analysis and let us discuss what happened to the Nifty in the previous week and what was the trade what we had taken in the last couple of weeks. So here you can see now Nifty is currently trading at this resistance zone. So basically what we are looking here is Nifty is in the extreme bullish trend. So in the last week we have given the strategy which was bull call spread, where we bought at the money and we sold out of money. So we taken this strategy for the Nifty and we expected the Nifty to be bullish, and the trend was right. And I hope for those who have traded with the strategies, please share your comments or feedback on that. What was your learnings, and would you be able to trade that, and would you be able to learn from those strategies what was how we decided the view and how exactly you need to create a view in the market? Because now going forward we'll be going with some of the unique strategies which you can trade with the stock option strategies, and also we'll discuss about how you can improve your consistency by using the options and futures data. We'll discuss about the importance of futures data, especially in stock options. So today we'll discuss some more unique concepts, so that will be really helpful for you. And a very good evening, everyone. A very good evening, Shubham, Sandeep, and Pradeep. Thank you for joining this live session. Okay, great. So you can see that now the Nifty is in the extreme bullish trend. So what we are looking in the current scenario is we are expecting that Nifty to remain bullish. It can touch up to this level. If you see the resistance line here, it has broken the crucial resistance which was there at 15,700. Sorry, it was at close to 15,680. So this resistance, it was broken by Nifty and there was a huge selling pressure. But even though there is a huge selling pressure, you can see the candle size here. There were a lot of people who are hedge funds or the people who have created shorts in the Nifty. They tried to push the market downside because they have created a lot of short options on the higher side. But what has happened is, even though there is a lot of selling pressure, you can see these candles in the last few hours of today's session. Any dip in the market, there is a huge buying, right? There is still a lot of buying pressure which is intact in the Nifty. You can compare with the previous day here. You can see that whenever we are seeing a huge buying pressure, the Nifty will always go in the upper direction. So still we are bullish in the Nifty trend. What we're expecting is maybe Nifty may take support at 15,600, but overall trend, what we're looking is it can head towards the 1950, which is close to 16,000 level. So we are expecting Nifty to be bullish by looking at the technical trend. So how we decided this? First is by seeing at the 50-day moving average, it is bullish, and also the 200-day moving average, it's also bullish. So this could be the possible trend, what we are expecting in the upcoming week, so that we can take advantage of this momentum, and we are expecting Nifty to touch this level, and from there we can see the consolidation. So this is about technical analysis, how we are analyzing by looking at the 1 hour time frame. So basically, why we are looking at 1 hour time frame? Because we get these pivot lines for every single week, right? So today was a Friday, so this week has expired. So this resistance, even though the Nifty closed below this resistance, but still there is a lot of buying pressure. You can see that any dip in the market, people are buying into this particular index. So we can expect it can break this upper side. Maybe it can take support at 15,600, which is a strong level of support zone. And from there, we can see the bounce in the Nifty. So this is what is the view, what we're looking in the technical basis. And we expect that maybe 16,000 or maybe 15,950 could be the major resistance for Nifty in the upcoming week. And so this is what is the view on technical. So if you're clear with the technicals, you can type yes in the comment box, or if you have any confusions with the trend analysis, or you have any other confusions with reading the candlesticks or how to identify the buying momentum, please do mention. I will try to clarify so that it will be really useful for you in your trading journey. Okay, a very good evening, fellas. A very good evening, Amrita sir. Thank you for joining this. And yeah, okay. So technically, what we're looking is the trend is bullish. So if you go for a daily time frame, also you can see that now the today's candle, it was doji. It was a bearish day, but you can see by the end of the day, the candle has closed above the previous day. You can see that the low which was created by the previous day, the candle has closed above this. Means what is happening is there is still a lot of buying pressure which is intact in the Nifty, And by looking at the daily time frame, there is still scope for Nifty. Nifty can go up to this level, which is close to 16,000 level. So this is what we're expecting in the trend of Nifty for a shorter time frame, maybe before the upcoming expiry. And this is about technical view. And if you're clear with me, you can type yes, so that we'll move on to the open interest and we'll discuss about the most important thing, which is futures data, because futures data is very important for you to make your analysis a little more high probable, because by looking at the futures data, you'll be able to get a lot of conviction, whether it is index or whether it is the stock options. And we'll discuss about some of the strategies, which recently we have been doing some research on some of the strategies, which is working really good for stock options. We'll discuss on that, how exactly you can trade and take advantage of these strategies. Okay, great. Thank you, everyone. Thank you for sharing your feedback. And you can see that we have one question from Amita sir. For entry, what time frame we should check? Oh, sorry, we have a question from Vijay. Yes. So that's a very good question, Vijay. So basically, what happens is, let's say, whenever we're taking a strategy, whenever we're doing the analysis, we take 1 hour time frame, because this will give the overall sentiment of the market. But let's say whenever you're taking the positions in intraday, we prefer you go for 15 minutes time frame. And 15 minutes time frame, why? Because you will get the exact entry or exit levels, and you'll also get the better spread ratio. Right? We'll discuss about that with some examples. It will be easy for you, so that it will be easy for you to understand. But now let us now only stick to this level on technical, and we'll go to the open interest, and also we'll go to the future, so that you get better clarity about how exactly you need to look for trend analysis. So technically, we are seeing a bullish momentum. You can see in the last couple of weeks, there was a huge buying. Any dip in the Nifty, there is a lot of buying here. Even though the Nifty consolidated, it was a consolidation which caused us to exit the strategy, but still there is a lot of buying pressure which is intact in the Nifty. So we expect that it will continue up to this level. Maybe from there we can see some consolidation. So this is about technical. Now let us go to the open interest, and let us see that how exactly the positions are created for the Nifty options. So for that, I will be going to the Opstra strategy builder, so that everybody can do your analysis and you can do the research. It's a free tool. It's Opstra strategy builder, and also you can learn how you can do your analysis on your own for all the different stocks which we'll be discussing, and we'll be sharing you some strategy how we can follow that. Okay, so now if you look at the open interest, we have taken this Opstra strategy builder. If you go to this homepage, this is the Opstra strategy builder. You just have to log in with your Google account and then click on get started. And here in the first stage, you will be getting the strategy builder, but you need to go to this options data here, and then you need to go to the open interest table here. So here you will be saying the entire open interest which is built up for the Nifty, and you can select any stocks which is traded in the F&O segment, and you'll be able to see the entire open interest. But now let us take this example for Nifty, and let us see how exactly the open interest is being created, and also we'll see that what could be the possible trend for the market for the upcoming week. And after discussing this, we'll go to the stock option strategies, which will be very helpful for you for those who are new. So here you can see that green color are the call open interest and red color are the put open interest. So for simplification, what I will do, I will just remove all this so that it will be easy for you to navigate the things. So you can see now I just selected the call option. This is the call open interest which is built up for the Nifty. And another thing you can notice here, it is for 10th June expiry. And for the June series, we got 17th June and also the 24th June. So let's select 24th June, and you can see 24th June. This is how the open interest is built up for the call side. You can see here, we are having the highest open interest at 16,000 level. Right? You can see there is the highest is at 16,000. It is not at 15,500, but it is at 16,000. This is clearly telling that there is a scope of bullishness in the Nifty. Nifty can touch 16,000 in this particular expiry. And another thing you need to notice here, if you go for this 10th June expiry, you can see here, this is how the open interest is built up for the call side. We have the highest call at 15,700, which is at the money strike price. And you can see here, we have 15,000 15,800 also we have close to 3 million, and also 16,000 we have 3 million. By looking at this, we are not very sure that where could be the resistance, but to get clarity, we need to see how the positions are shifted on the put side, right? For that, so let me just remove the call open interest. You can see here, this is how the positions are built up for the put open interest. Red color are the put open interest here. So highest is at 15,500. So that clearly tells us that Nifty is having a strong support at 15,500. It will not break this level because we have 2.6 million. And second highest is at close to 2.1 million. It is at 15,600 level. It's almost at the money support level. So let us try to club both these contracts. Let us try to club both Nifty and Bank Nifty, and let us see how exactly the open interest is built up. You can see here now, we are just looking at the historical open interest here. We have the highest at 15,700, but we are not very sure this is a strong resistance. Why am I telling this? Because you can see this red color, which is the put open interest, which is having 2 million contracts historically. The call open interest is 3.8 million. If you take a difference of this open interest of call and put, right? If you minus 3.8 minus 2.1, so there is a difference of only 1 million contracts, right? It's just like 1.5 to 1.6 million. So here, there is no strong conviction that this is the resistance for Nifty, because a lot of people have also created the put open interest, right? So that clearly tells us that this is not a strong resistance for Nifty. And if you see here at this level at 15,800, we have 3 million open interest at the call, and at the put side, we have close to 0.5 million. If you take a difference, it is 2.5 million. Means there is the put call ratio is really high in this case, right? If you see at 16,000 level, the highest call is at 3 million and the put is at 0.6 million. If you take a difference, it is just 2.5 million. So if you compare this 15,800 and 16,000 level, this is a weak resistance. 15,700, we are considering it is not a strong resistance. It is a weak resistance because a lot of put positions are already there at this particular strike price. So basically, you can see here by looking at the open interest, because we discussed about the technical chart, but technical, whatever we're looking, it is not 100%. Technical contributes to maybe 20 to 30% of your probability of success. Open interest will add another 20% probability. If you look at futures, it will add another 20%. So you are increasing your probability of success by looking at multiple data points. So technical is very important. Open interest is also very important, just like how the technical is, right? But reading open interest is very tricky, and you need to do some practice so that you get better clarity about taking the advantage here. So one thing you have to notice here is that whenever you see the highest open interest, don't think that this is the resistance for Nifty, because you should also compare how much put positions are there. If you take a difference of that, and you can see the difference is just 1.6 or 1.7 million. But if you compare to the other strike price, it is very less compared to the previous above strike price. So that clearly tells us that it is not a strong resistance. So we assume that maybe the Nifty can test this level of 15,000, maybe 15,600, and it can go in the upper direction. But we are clearly saying there is a lot of call positions which is built up. But to make our analysis a little more high probable, we need to go to the change in open interest. Change in open interest is a very important factor for us to understand and get better clarity here. So let us start with the call open interest. You can see so many positions have been created for today. You can see that we have close to around, we have close to 1.8 million contracts, which is built up at 15,700, and we have 1.7 million, which is built up at 15,800. So a lot of positions have added for the call for today. And if you compare with the put side, right? If you see on the put side, a lot of positions at 15,700 have been created, which is close to 0.6 million, right? And on the level of 15,500, we have close to 1 million contracts, which is added. If you compare the call and put, the call positions were added heavily, right? You can see here, we have the highest addition. The difference of call and put, it is close to 1.2 million, right, at this particular strike price. But if you calculate the difference on the higher strike price, like 15,800, the difference of call and put is just, it is more than 5 million, right? If you see the change in open interest, 1.7 minus 0.2. If you just minus the 1.7 minus 0.2, it is 0.5. So if you compare this particular strike price, even it is indicating that it's not as strong, but we can say there is a lot of call positions which is built up for today. So that is indicating maybe Nifty can take some support at 15,550 or maybe 15,600, and from there we can see the bullishness of the Nifty. So by looking at the open interest, we are indicating that Nifty may go up to 15,800 or maybe even at 16,000. So we are indicating bullish. By looking at change in open interest, we are expecting maybe Nifty can take resistance at 15,800 level, because a lot of positions have been built up. But one thing you need to notice here is that whenever the open interest is built up, which is closer to this particular strike price, if the Nifty approaches this particular strike price, there will be sudden short covering, right? If you saw the previous couple of weeks, a lot of people have created short positions, and because of that, if you see the trend of Nifty, the Nifty is shooting up because of short covering. Why? Because if a lot of people have created short position, add the money. If Nifty goes beyond that, so there will be huge short covering in the Nifty. So even we may see that particular level. So this was about the open interest. Now the most important thing is about the futures data. So if you're clear with me till now, you can type yes, so that I'll be proceeding further with the futures data, and let us see that what exactly the futures positions are being created for Nifty, and let us try to improve our analysis by looking at the futures data.